Today, I want to talk about a company that created a new way for gift givers across the globe to shop, pairing them with artists and creators for that perfect gift. It's a marketplace that thrived for years, but now faces new challenges, from comps to competitors and even itself. These battles threaten the company's spot as the king of its handmade marketplace. Get ready, we're talking about the one and only Etsy. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. Not always recognized as the go-to site for unique artists and gifts, Etsy has actually been around for a while. Started in 2005, Etsy's founders created the site as a way to streamline selling furniture. In just 2 years, the website grew quickly, with 500,000 users generating $26 million in gross merchandise sales, or GMS. Then, as the years went by, Etsy secured millions in funding to continue to build out the site, including acquiring an advertising company in 2009 and launching the site in other countries worldwide. However, only 9 years after its founding, Etsy grew to 54 million users, generating $2 billion in GMS in 2014. Just a year later, Etsy filed to go public at a $100 million valuation. Despite a few bumps in the road, such as being sued by its investors for fraud and other fee-related drama, Etsy managed to stay afloat all these years. Even though Etsy's competition has also improved, the company still manages to outpace its many rivals. That $100 million valuation has long since been eclipsed. Today, Etsy is valued at close to $30 billion. On that note, let's turn our attention to Etsy's financial health. First up on our list is revenue growth. In 2015, the company brought in $269 million and $818 million in 2019. Last year, however, the company brought in $1.73 billion. This is an impressive spike in revenue. Given the shut-in nature of 2020, it's reasonable to see this large increase, but it's also important to remember Etsy's increase in revenue will probably decrease moving forward like so many other companies. Second on the list is shares outstanding. Unsurprisingly, Etsy has gone from 91.1 million in 2015 to 121.3 million in 2020. In other words, Etsy is diluting its shareholders. I assume much of this is because of the company's large recent acquisitions. Still, it's share dilution nonetheless. Thirdly, we'll look at Etsy's free cash flow growth. In 2015, the company had $12.3 million in free cash flow. In 2020, that number had increased to a whopping $671 million, but then again, 2020 was a unique year. Next is current assets versus current liabilities. Etsy has $2.7 billion in current assets against $407 million in current liabilities, with an impressive $2.48 billion in cash, meaning Etsy can pay off all its short-term debts and nearly all of its long-term debts with this money. Impressive. Last here is free cash flow valuation. If we take the average of the last 5 years of Etsy's free cash flow at $211.9 million and multiply it by 20, we get an estimated market cap of $4.2 billion. Unfortunately, Etsy's current market cap stands at $28.1 billion. So while Etsy does appear to be a little overvalued from this model, we're going to look at another model later in the video that tells a different story. In this section, we're first going to look at the return on invested capital average over the last 5 years for Etsy. And it is well above our 9% goal, with a 12.2% average ROIC. Last year, the company posted an even better 31.2% return on invested capital. Again, 2020 was a unique year, still above our goal of 10% though. Pretty solid. Sadly, Etsy doesn't pay a dividend. Overall, Etsy is a stable company financially. With that said, let's get into whether or not Etsy is a good investment. Etsy's main growth engine is what the company calls building its house of brands. Even though the core Etsy site itself is still growing, Etsy has been investing in companies around the world, or outright buying them. These acquisitions have largely been the primary drivers of Etsy's recent growth. In particular, Etsy has acquired Depop, Reverb, and ELO7. Perhaps you've heard of these companies, but each one is a strong, unique brand, further expanding Etsy's total addressable market and general growth in those markets. Depop is a fashion site specifically for reselling clothing and apparel. Reverb specializes in musical instruments, which may seem like an odd choice, and ELO7 in particular has served as Etsy's door and a major step into the South American markets, and what a step it's been. Actually, ELO7 is often referred to as Etsy of South America, and compared to other giants in the region like Mercado Libre. While ELO7 may seem like a smaller company than Etsy, it garners millions of active buyers and tens of thousands of active sellers. It's rapidly expanding, capable of competing in the 5th largest by population country and South America's largest economy, Brazil. And the ELO7 acquisition is big in another way. It's Etsy's first real push into a region outside of the company's quote-unquote 6 core regions. These 6 core regions typically are the US, UK, Canada, Australia, Germany, and France. In other words, ELO7's acquisition is major for Etsy, so it's critical that the company continues to outperform expectations. It'll shape how Etsy moves forward in other regions across the globe, away from the old partnership focus it once used to have. If this does go well for Etsy, I expect the company to rapidly expand in other regions like India and other Asian markets. Even with this push into new regions and different acquisitions, Etsy core business has also been on fire. Despite coming off of steep comps of 2020, Etsy continuously beats estimates even this far into 2021. As of the company's most recent earnings call, which is Q2 of 2021, Etsy posted an impressive $3 billion in GMS, a 10% year-over-year growth comparison. Revenue stands at a whopping $529 million in this quarter alone, and that's an incredible 23% increase year over year. On top of that, Etsy stressed that this is also a non-mask GMS growth of 34%, since Etsy had put out a call to creators to make masks during 2020, resulting in a spike in both GMS and overall revenue. This is absolutely great to see. Another key part to Etsy's planned growth is the continued ability to generate more purchase volume per customer, an area where the company has excelled already. Looking at this graph from Etsy's most recent earnings report, the company received large amounts of new customers over the last 2 years, managing to also get these newcomers to spend more than average. Each new customer now spends an average of $46 on the site, an increase of 24% year over year. However, this number isn't nearly as important as the revenue per active buyer, which is essentially the lifeblood of the company. With an estimated 40 million active buyers, the GMS per active buyer is a hefty $129 in the last 12 months. Wow. Etsy proves it can draw in new customers and get them to spend cash, but what about its active, established customers or its creators? These are a few of the questions that expose some of the challenges facing Etsy, and really one of the biggest challenges Etsy faces is itself, and its ability to allocate capital. I want to take another look at Depop. Again, Depop is an apparel retailer specializing in reselling clothes. While this business model may be questionable, it's not the real problem. In 2020, Depop made $70 million in sales, which again were heavily inflated due to the unique nature of 2020. Etsy forked over an incredible $1.6 billion for this company. That puts the price tag at 23 times sales. And Depop sales are heavily inflated, leading me to my next question: what in the world is Etsy thinking? Granted, Depop is growing quickly. Does it deserve a $1.6 billion price tag on revenues of $70 million? The combined price Etsy paid for both Reverb and ELO7 is nearly 1/3 the price of Depop. The numbers for Reverb were somewhat hard to find, but in 2018 the company posted $36 million in revenue. Reverb was bought by Etsy in 2019 for $275 million, giving it a 7.6% estimated price to sales. Maybe this is an unfair comparison, but the question still stands. Will overpaying on acquisitions and growth become a trend for Etsy? I would like to think all this money could have been better spent reinvesting into Etsy's own organic growth. Plus, as one journalist put it, Etsy has lost its soul. In recent years, in its pursuit of fueling growth, Etsy has seemingly pushed away the very base that helped build the company. With the new CEO established in 2017, the company enacted changes that predominantly affected smaller sellers, and not necessarily in a good way. One change that ruffled the feathers of many of its sellers and creators was the implementation of an ad program. It's a simple program. Etsy runs ads for a seller's product. Great, until Etsy takes a 15% fee from the sale generated by that ad. For bigger sellers, those making over $10,000 in volume cannot opt out of the program, locking those sellers in a business practice whether they wanted it or not, and then making them pay for it. Even if the fee has been lowered to 12%, I'm sure it's an unwanted hassle nonetheless. Etsy also implemented a change that forces sellers to include free shipping on all orders over $35. The penalty for ignoring this new rule is search restrictions on their shops and products. This change came in conjunction with removing the ability for sellers to use PayPal for transactions on Etsy. Instead, they have to use Etsy's internal payment program, and in 2017, Etsy also raised the percent fee taken from all orders from 3.5% plus 20 cents for listing to 5% plus 20 cents per listing. Changes like these and many others yielded a tremendous profit for the company, but at what cost? I believe it's sellers. Personally, I haven't yet bought or sold anything on Etsy, but I understand that many artists, artisans, and other creators use Etsy to make a living. I can't imagine how many people have been driven away from the platform because of these changes. Ultimately, I think Etsy needs to be especially careful driving these people away. They take their clientele with them, and the competition is just getting better and better every day. Rival companies are popping up, eating away at Etsy's uniqueness in the online space. Etsy may have opened the door to the handcraft artisan-made markets, but other companies are rushing to enter those markets too. Shopify, Handcrafted by Amazon, Big Cartel, and Artfire are just a handful of the companies attempting to take market share away from Etsy, and they're doing a really good job of it. Even though Etsy remains the king in its niche, should the company continue to implement forceful changes that negatively impact its core base, especially sellers, I see Etsy losing that spot and losing even more market share to its rivals who don't punish sellers nearly as much. So the question is, will I be buying Etsy? The answer? Well, no. Not right now. While I think the company is a pretty good deal right now, there are just too many unknowns. One of my major concerns is what Etsy plans on doing once the pandemic revenue boost is over, and its expansion plans in general. Its overpaying for acquisitions like Depop concerns me. Yes, I want to see Etsy expand into other areas, there's a lot of potential growth, but can these expansions and acquisitions continue to grow like they have? Plus, what happens if Etsy drives away too much of its core selling base? Then what? If I were to start buying Etsy, I would want to start buying shares under $205. This assumes that Etsy maintains a 25% revenue growth rate over the next 10 years with mild share dilution. Although my price target is fairly close to the current price, I encourage you to do your own research to determine if it's the right fit for your portfolio. Please don't go out and buy a stock because some random guy on the internet thinks it might be a good idea. All that said, that's all I've got for you in this video about Etsy. I would love to hear your thoughts on the company in the comments section below, or hop into my Discord for a more in-depth conversation. Link in the description. Until next time, I will see all of you in the next episode of Dollars and Cents.